Hey, welcome back, everyone, and recording here a little over a week before Thanksgiving. So, whenever you get this, hope you either are about to or have had a happy Thanksgiving. I've got a few notes I'm going to share. You can see the title of this is Vitamin C. We've done videos in the past with the same title. We're basically returning to the concept. So, it's time for a little bit of vitamin C supplementation. So, just as vitamin C is a really important nutrient that we need to take in from food, our body actually does not produce it. So we have to take it in through food or we become depleted of it. And if we become depleted of it, it can have severe health consequences, which can lead all the way to scurvy and beyond. And so it's really important. And so, in the same way, investors don't naturally keep up a good vitamin C supplementation against overreacting to common market fluctuations. It has to be every now and then injected. And so this is an effort to inject some of that into you to keep up your reserves. The reason why we're spending this time is we are overdue for a correction with securities prices, namely prices of the great companies of the world. It's been 2.5 years since we've had a downward correction worthy of the term correction. And so when it happens, from our perspective, it will be absolutely expected, overdue, and normal. We plan for these things. But when it happens, the world out there, I'm pointing to some windows that aren't too far away from me, they're going to communicate it to you as abnormal, unexpected, and awful. And that can cause some overreaction by investors. We're trying to help prevent that. Case in point, couple of case in points, and I'll be just about done. If you look back over the last 24 years, always looking at the easiest data that anybody has, which is the results of the top 500 companies in the U.S. tracked by Standard & Poor's, the Standard & Poor's 500. If you go back to March of 2000, starting with March of 2000, we have lived through 4 pretty savage downturns during that 24 years. And what would have happened, though, is that somebody put in $100,000 into the Standard & Poor's 500 companies right before, the day before the first of these 4 savage downturns, which means their 100,000, the first experience would have been a real sharp downturn. That 100,000 by this year would have been worth, are you ready for it? $600,000. There is another pundit who took this example back 50 full years and concluded that during that entire time, there never, underline never, would have been a good time to sell. So downward fluctuations are normal. They are part of what we expect. So we wanted to share this, accept this as a vitamin C supplement for our reactions to these things. Be ready. We are, and we'll continue to stay disciplined and take advantage of it all the way. With that being said, until next time, thank you.